March 9th, 2009, the S&P 500 closed at 676 points. The financial world was in free fall. Lehman Brothers had collapsed 6 months earlier. Retirement accounts had been cut in half. Headlines were writing about the worst economic crisis since the Great Depression. A teacher named Margaret did something everyone at the time thought was crazy. She took the $50,000 she had been saving for a house down payment and invested it in a simple S&P 500 index fund. Her friends thought she had lost her mind. Her family begged her to wait until things calmed down. Margaret ignored them all. Today, that $50,000 investment is worth approximately $590,000. She didn't pick individual stocks. She didn't time the market perfectly. She had no insider information. She simply recognized a moment that comes along perhaps once or twice in a generation. A moment where fear creates opportunities that turn ordinary people into millionaires. I want to tell you about this today because we are living through a similar moment right now, and I feel sad that most young people can't see it. As someone who has been working in the real estate sector for years, as someone who owns more than one company, I'm telling you this: learning to read the market is more valuable than anything taught in school. Let's get to the real issue. $124 trillion. This is not a typo. $124 trillion in wealth will change hands over the next 20 years, and the vast majority of people have no idea it's happening. When I first heard this, I couldn't believe it either. I researched it. I verified the numbers. This figure exceeds the combined annual economic output of every country in the world, more than 5 times the U.S. national debt. 80 years of accumulated American economic growth is now turning into a river flowing between generations. Here's how the mechanics work. Baby boomers, those born between 1946 and 1964, control approximately 52% of all wealth in America. That's roughly $78 trillion. The youngest boomers turned 62 this year. The oldest are approaching 80. This wealth will flow to their children, their grandchildren, and charities over the next 20 years. Gen X will inherit approximately $39 trillion. Millennials approximately $46 trillion. Even Gen Z will begin receiving significant inheritances as things accelerate through the 2030s and 2040s. But let me tell you something. It's very important not to misunderstand this inheritance issue. When most people hear this news, they think only those waiting for an inheritance will win. Wrong. Completely wrong. Approximately 62% of the $124 trillion comes from high net worth and ultra high net worth households. That corresponds to only 2% of all households, so the wealth transfer is highly concentrated. A small number of families will inherit enormous amounts. Counting on the inheritance itself is a weak strategy. But the real opportunity is this: the movement of this money creates ripples across the entire economy. When $124 trillion changes hands, it doesn't sit still somewhere. It goes into investments. It gets spent. It flows into businesses, real estate, and markets. Every dollar that moves opens up opportunities for people ready to capture that movement. As someone from the real estate world, I want to emphasize this in particular. This transfer will dramatically reshape housing markets. Those who inherit wealth will want to buy homes. Inherited properties will enter the market. Competition will increase in areas where younger generations want to live. I analyzed these movements for years across my real estate companies. Being in the right location at the right time determines the difference between building wealth and missing opportunities. Since 2000, median home prices have risen over 150%, but this appreciation has shown unimaginable differences by geography. $500,000 invested in Austin and $500,000 invested in Cleveland will produce completely different results over the next 20 years. Geographic awareness translates directly into wealth accumulation. Now let me talk to you through numbers because I don't like speaking in abstractions. Say you are 35 years old today. You are investing $500 a month into diversified index funds for 25 years, the exact duration of the great wealth transfer. At the historical average annual return of 10%, your $150,000 in contributions grows to approximately $665,000. At a more conservative 7% return, it becomes approximately $415,000. And if the economic momentum created by the wealth transfer runs just 1 point above historical averages, these numbers change meaningfully. When you increase the monthly contribution to $1,000, as careers progress, these numbers grow linearly. $665,000 turns into $1.33 million. Ordinary people reach millionaire status through consistency alone. So what do you need to do? Let me draw you an action framework, thinking with a business person's mindset. First, make maximum contributions to your tax-advantaged accounts. A portion of the $124 trillion transfer will be captured by people whose retirement accounts grow alongside economic expansion. Fill up your 401k, fill up your IRA. These accounts allow wealth to grow on a compounding basis without an annual tax burden. Second, expose yourself to broad equity markets and analyze them. Don't try to predict which sector will benefit the most. Own the entire market through low-cost index funds. As the wealth transfer flows into various investments, broad market exposure guarantees participation in overall growth. Third, develop skills that serve the movement of wealth. Expertise in finance finance, real estate, wealth management, or tax advisory creates opportunities to capture the flow of capital. I did exactly this in my own career. I didn't just sell real estate, I understood where wealth was flowing and I positioned myself there. Fourth, build cash reserves for opportunistic deployment. The wealth transfer will create dislocation moments when assets become temporarily mispriced. Having capital in hand when others are forced to sell provides returns that will allow you to thrive during periodic disruptions. Fifth, extend your time horizon. Think in decades rather than years. The transfer is spread across 25 years. Take your position accordingly. Short-term market movements matter far less than long-term participation. Sixth, think about geographic positioning. If you have flexibility about where you will live, research where wealth will concentrate and where it will disperse. Real estate and receiving markets may perform significantly better. Seventh, have conversations within the family. Understanding family plans helps you do financial planning, whether you are in a position to potentially receive inheritance or in a position to leave wealth. Doing proper estate planning guarantees efficient transfers. There's one more thing I can't go without saying. In 2009, the market bottom was visible to everyone. The $124 trillion transfer is documented in research reports accessible to anyone willing to read them. Yet in both cases, most people fail to act. In 2009, fear paralyzed investors. Today, distraction and short-term thinking prevent people from seeing an event that spans decades. The people who became millionaires after 2009 were not lucky. They were simply willing to act on information everyone had access to. The same will be true for those who benefit most from the wealth transfer. Teacher Margaret didn't know in 2009 that she was capturing a once-in-a-generation opportunity. She simply recognized that fear was creating value and acted accordingly. Today's opportunity is different in mechanism, but similar in scale. Trillions of dollars are moving. Millions of new millionaires will emerge. History will record this period as a defining wealth creation event. You know this now. You know the scale. You know the timeline. You know the strategies that prepare ordinary people to win. What you do with this knowledge will determine whether you will look back on this period like millions of others and say, that was the moment everything changed. Ask yourself this too. When are you going to start doing this?